All right, so on today's show here, we've got my good buddy Brandon Chapman. Brandon's an independent certified financial planner with SasS Wealth. Brandon comes highly regarded in the industry. He personally works with a lot of my clients, which is why I want to have him on the show, because it's not just some guy I met in the street. This is someone I know intimately quite well. And I ultimately wanted to bring Brandon on today just because the show is all about financial education, growing, protecting your hard-earned capital. So I want to get Brandon's perspective, at least from a tax planning and strategic investment side of things, because I think there's a lot more that just goes into it, right? So like the biggest thing that I get is people reaching out to me and saying, "Hey, should I buy a house?" And it's like, okay, well, first of all, I don't know you. You just slid into my DMs. Number one. Number two is like, there's a much bigger picture here, right? It's like, how much cash do you have? What's your savings? Why are you trying to buy? How long are you going to be there? There's so many things that go into this. So I kind of wanted to have Brandon on. So Brandon, thanks for coming on the show here.
Thanks for having me on, Steve. Yeah, love all the education you provide to the community, and it's a real pleasure to be here today.
Beauty, man. Let's do it. So yeah, I mean, I kind of start from the high level. Obviously, we're in this crazy era of negative interest rates, unlimited QE, money printing, unlimited deficit spending, massive debts, crazy high house prices. We're sort of in this MMT, modern monetary theory environment. Like, I feel like it's such a pivotal moment where we're seeing this widening of the wealth gap, where basically either you own assets or you're being left behind. The middle class is almost being, in my opinion, being decimated by these policies, with seemingly doesn't seem to be any end in sight for it. How are you? What are you telling clients today, or rather, how would you be positioning some of them?
Yeah, first off, I don't agree with a lot of the policy decisions and the ways that our governments around the world are acting in unison, printing money and devaluing their currency. Of course, that increases the value of assets. So I've always been a proponent of clients owning assets, whether it's real estate, stocks, in some cases bonds, and then more recently cryptocurrency has obviously taken a big uplift. So whenever a government says we're going to print more money, I think anybody should be thinking, okay, well, I should probably own less of that currency. And that shouldn't mean spend it, but that should mean buying real estate for somebody like Steve, buying some stocks either on your own accord or through an advisor, or it means buying other appreciating assets that are going to do well, regardless of what happens from the monetary side of things.
Yeah, no, absolutely. And like, I think a lot of your clients are in the tech space as well, right?
Yeah, like a lot of my clients are smart. They read financial news. They are aware of what's going on in the markets. And because of that, they tend to know they should own assets. So they own either shares in the companies that they've started, they own shares in other technology companies they believe in, but they're diversified. They're owning shares in other companies as well. And so real estate's a super important component of that, but it's not the be all end all.
Yeah, I was gonna ask you. I mean, obviously, from the tech side of things, I mean, I don't know how much you can say, but like a lot of your clients, like for example, I always find it interesting, like so in the crypto space, and again, I know that's like kind of a love-hate relationship with a lot of people here, but do you find that like a lot of your clients in the tech space are more on in the crypto side of things? I just feel like it's like blockchain and cryptocurrencies and stuff. I feel like are a hard thing for people to wrap their head around. Like it's kind of a complicated new subject, but I tend to find that most people that seem to understand it or seem to be investing in it are people in the technology space first and foremost. I don't know. Has that been your experience as well, or?
Yeah, well, I don't have laser eyes on Twitter yet, but what I will say is that I am a blockchain enthusiast, and I do think the blockchain technology is fascinating, and it's definitely going to revolutionize the way finance operates. I think what the majority of people are underpricing is the strength of those in power who essentially manage the financial system and pull the strings, how much power they have over the financial system, and to what lengths they will go to retain control of the financial system. So many of my clients do own crypto, and it does form a portion of their portfolio. But like most things in life, you never want to be all in on anything. You want to make sure you've got some balance in your portfolio, whether that means owning Bitcoin, Ethereum, real estate, stocks, and certainly not in that order, but it is about balance.
Yeah, it's funny. I feel like I like that. I mean, again, this is just my own views, but I like the fact that you're sort of open to that. I know like a lot of portfolio managers, some of them that I'm friends with, and I think they're smart people, but they just don't like crypto, or they don't want to understand it, or maybe it's because you can't necessarily collect a management fee off of it in some cases. So I feel like there's maybe a little bit of a conflict there, but I appreciate the fact that you're open to that. And yeah, I think like you said, it doesn't have to be a large percentage of your portfolio, but I mean, it is sort of again, almost like a newer technology. But
Yeah, well, like I heard of a guy who he basically put his down payment into crypto last year, thought he was going to ride this wave and buy a nicer place, and then what happened with financial markets. Then Bitcoin takes a big dump. Like at the end of the day, you can't just read a few articles online and then throw your life savings at an asset class. Like you should probably talk to somebody before you do stuff like that.
yeah, I was going to ask you, is that's a good segue, because I think there's a lot of people that are watching this show, or at least I get a lot of inquiries about it, that okay, so you've got like, especially the younger crowd, they're trying to get into the housing market, they're trying to save money, but again, saving cash has been a pretty just horrible experience, I think, for a lot of people, earning less than 1% in the GIC, for example. So they're like, hey, like I'm trying so hard to save this money, but like, the Canadian government's expanding the money supply by 20% every year, and house prices are going up by 10, 15, 20% a year. My savings are becoming essentially worthless. Like, how do you advise sort of maybe the average person on, okay, if you're saving for a down payment for a house, for example, like where would you keep that savings? Because obviously you want to have it fairly liquid, but at the same time you do need to have a little bit of a return. Is there, I mean, I know it's probably going to be case by case. Is there anything you can say on that?
Yeah, definitely case by case. But I think what is important to consider is time horizon. So if someone is in a position where they're going to be able to buy a home in the next year, most likely they should be in some sort of high interest savings or cash equivalent, even though that is going to be devalued from an inflation perspective year over year. But if they're 3 to 5 years away from buying a place and it's not a reality in a shorter period than that, they would probably be better off to have some assets in their portfolio, whether that's stock, cryptocurrency, some sort of fixed income asset class. And the reason for that is, yeah, you're spot on. The fact that we've got inflation running super hot right now, if they're sitting in cash, they're going to be farther behind. An issue I do find too is sort of this bias where people think, oh, well, I'm never going to buy a home. And then they just don't, and they just sit in cash and they're kind of waiting for the crash. And I think that's actually a far greater risk for people than if they just get something. You're better to own something than just say, I'm pissed off at the system. And like, I have a number of clients who they've had their parents like help them with down payments. And I, didn't have that as an option for me. So I had to rent out a really cheap basement suite for 5 years and, pay the $1,000 rent, have a roommate, go through that experience. Was it fun? No, but, builds a bit of character, and you can be frustrated at the other kids or whatever who have the family support. But at the end of the day, you can only control what's in your peripheral. And so I think if everyone just kind of looks introspectively about what do you care about, what are your values, and what do you want to accomplish, that'll actually help them get to where they want to go, more so than just sort of being mad at the system.
Yeah, I think that's a really good point, because it kind of brings me to I get a lot of people that, on Twitter or YouTube or whatever, like, I feel like everybody kind of goes through this phase where you kind of start learning about the sort of financial system or the monetary system. You basically figure out like, okay, how money is made, and this sort of, we're in this unsustainable, feels like, or unstable maybe, financial system where basically it relies on, massive amounts of QE or money printing, whatever you want to call it. You got to keep rates suppressed. And so I get a lot of these people that come to me and go, this is totally unsustainable, it's going to crash any day. And they basically go to all cash, or they go to all precious metal. And it's just like, there's like just a complete lack of trust or faith in the system. But I mean, do you have any thoughts on that? Because like, I don't know, my personal view is like, yeah, it's like you don't have to agree with the system. Like I'll be the first to be, I'll be the first one to say I'm extremely skeptical that you know can continue to derive growth. But the reality is these systems are basically predicated on going up and to the right.
Well, you nailed it. Like I was probably heavy cash a year and a half ago because I've been telling clients like the last recession was 2009, but every 10 years we see a recession, there's probably going to be a dip. When interest rates were up, around 3.2, 3.3 here in Canada, I was under the impression that, okay, this is going to cause some foreclosure for those that are over leveraged. And then COVID hit and all of a sudden money printers went on, interest rates dropped to the floor. I encouraged every client to buy a home ASAP, and I ended up buying one as well. So I think the fact of the matter is know where we're at in the economic cycle, recognize there is a cycle, and even if we don't agree with the way in which our policymakers make decisions, they're going to make those decisions. And if they tell us blatantly what they are, we'd be stupid to not act on those decisions, because that's what big money is doing. That's why the rich get richer, is because they follow the signals of where we're at in the economic cycle, and everybody can do it thanks to guys like you who actually try to dispel positive information about what's actually happening that mainstream media most likely is not going to be publicizing.
Get as close to the money printers as possible. Yeah, no, that's a good point, because I think that it's funny. I'm reading, like, I always go and like I see like a CBC news article, and it's like, oh, housing to go up this year or next year or whatever, like economist says. And then you kind of dig through and they give you the reasons. They say low interest rates are predicting to, but they never talk about the central bank manipulation behind those rates. They never talk about quantitative easing. Like if you talk about quantitative easing in a CBC news article, 99% of their readers aren't going to know what the hell they're talking about. So yeah, it's unfortunate, because I think the average person just kind of says, oh, it's low interest rates. Well, it's like, you have to, once you start sort of unpacking a little bit further, you can see there's much more to it. It's like, no, these guys are literally, essentially quite literally printing money and devaluing your currency blatantly in front of you. And the average person thinks, oh, this is great. Free CERB check. I don't have to pay it back. And it's like, well, you think that this money is just going to rain from the sky and there's not going to be any repercussions. No, the repercussions is your housing is becoming more expensive and pricing you out.
Yeah, 100%. And nothing in life is free. And so whenever, you hear something free from the government, there's going to be some hand coming back in some other way. So we're starting to see some increase in taxes, and I expect we'll see more. Luckily, we've got Pierre Poilievre at Trudeau on a regular basis, trying to hammer out where this is going to get paid from. But it's been pretty clear that the Bank of Canada can just keep paying for the federal government's policy measures. But yeah, I don't know how much longer it can keep going in this fashion.
Yeah, so I mean, let's like kind of talk about taxes, sort of a segue, because I think that's sort of, I mean, you're almost your area of expertise, right? I mean, I think it's about the whole tax planning side of things, because like as we talked about at the beginning of the show, right? It's like people that are looking to make a real estate purchase. I mean, there's so many things that go involved, right? That you have to factor in the taxes. Like if you're selling an investment property, there's capital gains. Like how restructuring your income this year. So is there anything that you can kind of touch on that? Like, I guess what's maybe the biggest mistake that you see clients making?
Not recognizing what tax shelters are and which ones they should be using at depending on where they're at in life. So, in Canada, we have really three true tax shelters. We've got the principal residence tax exemption, we've got the tax-free savings account, and we've got whole life or participating life insurance. Now, the principal residence is arguably the best one. And if you look at where most of the wealthy tend to park a lot of their wealth, it's in their principal residence. So why buy a property in West Vancouver for $30 million? Because you want 10 or 12 bedrooms? No, but you do want to have a store of wealth that's going to continue to grow tax-free. Now, if you don't have your principal residence and you're trying to build wealth, the tax-free savings account, which should be called a tax-free investment account, because a lot of the banks have people sitting in GICs or high interest savings in their TFSAs, and they're getting 1% rate of return when they could be investing in a low cost index fund or a mutual fund through an advisor, getting 8 or 12%. So yeah, those are, I'd say, the top two that everybody should be using. And it sounds simple, but oftentimes I'll see people in a very inexpensive principal residence, maybe it's a 500K apartment, and they buy 2 or 3 other rental properties, and they think, oh yeah, because I'm leveraged and I can write off all the stuff. I'm like, sure, but you're gonna have to pay capital gains on the growth of all those, and you could get yourself into a bigger home instead of just getting all these non-registered properties.
Yeah, no, absolutely. And you sort of factor in, I'm assuming, like RSPs and maybe like flow through shares as well.
Yeah, RSP, it's really a tax deferral. So for anybody earning over 100 grand a year, putting money into your RSP on a regular basis to reduce that taxable income is a smart move. If you're looking at flow through shares, or if you're trying to buy with, say, the venture capital tax credit and get certain tax incentives, the big point I'll say is keep it simple. I see so many people get bought into this hype where they'll watch a webinar or masterclass on XYZ finance from random guy on the internet, and then they'll pay $1,000 for the course, then they'll put 10 grand into this thing that they have no idea how it works, just because some guy said, oh, you're going to save money on taxes. So I think people generally just kind of need to keep things simple and try not to overcomplicate their financial lives, trying to get ahead quickly. I really do believe in getting rich slowly. And if you look at most entrepreneurs, they didn't become an overnight success. They busted their ass for 5 or 10 years, made very little money, and then they were an overnight success. But the media tends to hype up those situations. And I think everybody can kind of, they look at themselves in the mirror and say, oh, why can't I do that? And then they see this kind of get rich quick scheme that seems like it makes sense, and they'll get into it. So yeah, RSPs, flow through shares, like there's lots of tax mechanisms, especially as you become a business owner, whether it's like with employees or professional corp like yourself. There's a lot of options.
Yeah, no, for sure. I mean, I definitely think that's part of the strategy for that. Like, everybody's trying to get rich quick now. Obviously, as bullish as I am in the crypto space, we see a lot of that in the crypto space. But yeah, and I think the other thing too is, like, I think the one thing that I think is important for people to understand, like, yeah, I'm certainly a self-motivated individual. I like to learn stuff, like to sort of play around a little bit. But I think the one thing that I tend to find, just having a lot of conversations with the people, is that when they're managing their money, it just takes so much of their own bandwidth, and they can't focus on like growing themselves personally in other areas, or growing their business, or scaling up in their company. And then obviously, you get the emotional side of it too. Like when you can open up your phone now, pull up your mobile phone and hit sell. I mean, as soon as the market takes a dump, you see that people sort of react emotionally. And so I think that's probably the one thing I would say, an advisor certainly brings some value to as well, that probably gets overlooked because everybody just looks at it from a fees perspective. But
well, yeah, and the same can be said for realtors. Oh yeah, I can search up online and find a property and go buy it. But my wife's a lawyer, so she could transact the deal. But is that going to be, am I going to get the best deal? Am I going to read through the strata docs? Am I going to know if that building's good, or the building next door, or that development that's coming through in that neighborhood? Probably not. So I think you bring up a good point that information is readily available, but wisdom is rare. So the internet has really democratized access to information, but it's distilling down what actually makes sense for someone's unique situation. And that comes from experience. So, you sell hundreds of properties a year. So are you going to know more than someone that happens to spend a lot of time on the internet, instead of investing in themselves, into their career, to increase their income, to increase their borrowing capacity, grow their business, etc. All of us have 24 hours in a day, but the way in which we choose to use it will determine our success.
Yeah, no, I think that's a good point. I mean, I could say, like, specifically in my industry here, like, I know everybody hates realtors. I get it. But like, man, like, you think about it, like, realistically, like, I always tell this to clients, like, when I'm interviewing them, especially like new clients that I'm sort of onboarding, it's like, most people are, so you're going to make in Vancouver, you're going to make, let's say, $1 million investment. That's really what it is. So you're going to plop down $1 million. Now you're looking for a realtor to represent you, for example. Like, most of the time, if you're going to make a $1 million investment in, say, crypto or the stock market or whatever, chances are you're going to do a hell of a lot of due diligence, a hell of a lot of research. You're probably going to research a whole bunch of investment advisors, sit down with them and figure out who's best for you. I just find it interesting on the realtor side of things, as a lot of people just go and pick the first realtor they find first person that responds to their email online, or hey, my friend's a part-time bartender and on the side he's got his real estate license. Like, you're going to trust this individual with your $1 million investment. So yeah, I find it interesting, but yeah, I think there is certainly, I would say, in my opinion anyways, it's, there's a reason why 10% of realtors do all the business. It's because those are the ones that are actually, in my opinion, good and giving good advice. Like, for myself, people ask me a lot of the time too, like, hey Steve, like, you invest in Calgary. Oh, like, I have my own real estate license. I do a lot of real estate here, but like, when I go to Calgary, I hire a realtor there that I know, that I like, that I trust, because the advice is worth it. It's not worth it for me to try to save $7,000 and put that back in my jeans. But anyways, teach their own. Yeah, no, I wanted to ask you about, do you have it like on real estate investment? People a lot of the times it's asking about, hey, should I buy? Should I rent? What's your typical advice? I know there's probably a lot of stuff that go into it, but like, how do you generally look at things? And just full disclosure, this is a real estate related podcast or show, but like, I am all for people renting. In a lot of cases, they should. So, don't think that you need to pump this up. I generally want to hear your thoughts.
Yeah, if you're not planning to be in a location for very long, renting is a great solution because you're not tied to that particular spot. So the cost can be potentially low. You don't have to deal with painting. You don't have to deal with shingles or raccoons in the backyard. There's a lot of benefits to renting. But that being said, if you're going to stay in a certain location for a long time, and you would prefer to have control over the space that you currently live in and not get rent evicted, there are certainly advantages to owning. Any client that I work with and we do financial planning, it's looking at, well, what are your short-term and long-term objectives, and then trying to align if real estate ownership fits into that mix. Now, if somebody lives in a metropolis area like Vancouver, Toronto, and they only, maybe they only make 20 or 30 grand a year, and they're not anticipating that's going to go up in the near future, owning might not be an option in those cities. And so the question becomes, all right, well, should those people choose to invest in their education to increase their income potential, or do they move somewhere else if they want to own elsewhere? And those are all potential options. So I think it all comes down to what the goals and objectives are of the individual. Like I own my home in New Westminster with my wife, and we enjoy our home. But when I go to Tofino or Kelowna, I certainly rent a place. Whether I'm staying there for a week or a month, renting is better at this point in time. But down the road, will it make sense to own other property? I hope so. But everyone's situation is different, for sure.
Yeah, I actually get a lot of clients that like the younger crowd. So they're sort of, let's say, in their late 20s, early 30s. They're sort of in between, like, hey, we're recently engaged or recently married, planning on having kids, but not having kids yet for a couple more years. Don't necessarily need the bigger house right now, but know that we're going to need it in 4 years. And I don't know, like, for me anyways, a lot of the times I just tell them, hey, like, maybe it makes sense for you guys just to rent, because you're kind of in this awkward gap where it's like, you guys don't really need a house. You can't really afford a house yet, but like, it doesn't necessarily make sense for you guys to buy a 1-bedroom or 2-bedroom condo because you're going to outgrow it in 3 years. So I think it's definitely an individualized discussion, but certainly from my perspective as a realtor, I have no issues whatsoever with people renting. But yeah, anyways, I know that that's almost slander in Canada. But yeah, so just to kind of on the investment side, as well as we kind of keep talking here, but yeah, we've got the 3 tax shelters. Is there anything else from a sort of financial planner, investment advisor perspective that you generally recommend to people, or like what's things that maybe people are overlooking or don't understand? Like, take in mind that I think a lot of people probably haven't had conversations with financial planners. I think there's a lot of DIYs, particularly here on YouTube, and that's awesome. But curious if there's any sort of general additional advice that you can give.
Yeah, just invest in yourself. Like I don't know the age demographic of the channel, but I'm guessing probably around our age, maybe plus or minus 5 or 10 years. But you spoke briefly about this earlier, how if people spend all their time trying to learn everything about every industry, including investing, then they maybe aren't up leveling their skills, getting professional designations, growing their business. So I think if there's kind of three rules of thumb that I like to share with anyone I work with. One is work with an advisor you trust. Two is maintain emergency savings, and then three is pay yourself first on a regular basis. And so these are pretty simple personal finance tips that everyone likely follows in this channel, considering they're listening to this channel and up leveling their own knowledge on a regular basis. But once you've got those figured out, it's invest in yourself to get that income potential where you need it to buy the assets, provide the lifestyle that you want. And you're right, in Canada, why is homeownership common among most people? Well, the government incentivizes it through lower interest rates. So if you own a home, you get cheaper money, and you then can have a home equity line of credit and use that for other stuff. If you don't have the home equity line of credit, you're stuck with personal lines of credit where you're paying higher rates of interest. So, even for myself as a business owner, having some home equity to tap into for my business puts me in a better position than needing to go to the BDC or go to some other lender who might charge me more. So it's just our government incentivizes us to own property, so we kind of should buy it.
I think that's actually a really, really, really important point, because I literally had this conversation the other day with someone on Twitter, because they're asking me about home ownership, for example. So they were saying, basically the argument was, it's a valid question, but this argument was, why would I buy a house? Why don't I just keep renting, and I can just invest like that money in stocks? And I said, well, you don't really get the leverage and the principal pay down and all that stuff. But I said, hey, teach your own. And he's like, well, I can leverage my stock portfolio. I says, yes, you could, but you're going to get a margin call if the market goes down. You don't get a margin call on your house. You keep paying the bills and you keep paying off your principal. And I think the one thing that you mentioned there which was because I kind of kept having this conversation with him, is that business loans. So if anyone's looking to start a business, go to the bank and try to ask for a loan to start your business. Good luck. The reality is, and this is part of the reason why house prices are so high, I've talked about this on the channel numerous times, is that banks are a business. The safest thing for banks to lend on is residential land. So banks will lever 80% loan to value on a piece of land because it's a piece of land. They know it's going to be there and they can seize it if you default. On your business can go to zero. You could be a terrible operator. So from a bank's perspective, not only do they not want to lend you money, but second of all, the rate of interest is going to be significantly higher. So, we can talk about this all day long, but I was just having a good conversation with a builder out in Calgary, where I'm working on a project for myself right now. And he was just saying, he's got a whole bunch of projects on the go. And he's like, hey, listen, I tap into, he's a general contractor, so he builds a lot of his own real estate. But he says, when I do that, because construction financing, for example, is very difficult to get. They make you jump through all these hoops and you can only draw money at certain points of the construction. He goes, listen, I just lever my house. I borrow it at 3%. 2.5% today, and I'm saving myself about 3 percentage points on the construction side of things, and I can pull it whenever I want. And so, again, people can agree or disagree with that and say, "Oh, that's BS" or "that's risky" or whatever. But that's just what it is. That's just how the banks operate. So there's something to sort of keep in mind there.
Yeah, I think you nailed it. There's just there's so much policy set up to benefit homeowners, and the economic engine, especially in Canada, is built around it. So it's not a question of should people own real estate. I think everyone at some point should. It's just a question of when it makes sense for their life situation. And you brought up a couple points: young family in a city, other priorities. Maybe it's someone who plans to go live in Europe for a few years. Should they buy real estate here if they don't have family to manage it? Maybe not. So. But yeah, debt, which our economy is built on, is really the fundamental reason why people should likely get into real estate at some point, is just to take advantage of the low interest rates.
Not to be a real estate pumper here, because that's certainly far from what this channel tries to be. But I certainly get that. I really believe, and I get the argument that Canadian real estate valuations are extremely toppy, frothy, overvalued, whatever the argument is. I've just said to people that, listen, this thing is systemic. It's systemically important. And that's why no level, like if you really think about it, government, if they actually wanted to, could bring house prices down tomorrow. There's a reason that they don't, and there's a reason that nobody wants this thing to sort of collapse on their own while they're in power. And I think that if you look at it historically, while I still think there will be a meaningful correction at some point, I think that households here are just too over-levered. I think that real estate over centuries has proven to be a store of immense value and wealth creation. It's really, kind of like the game of Monopoly ultimately. So, but any sort of last sort of parting words as we wrap this up here, like, again, I really wanted to bring you on initially from just the whole sort of tax planning side of things, because like I said, I get so many questions. The number one question I get is, should I buy? And it's, again, I really can't emphasize enough, it depends on your individual situation, depends where you are in your life, why you want to buy. But is there any sort of parting words, or again, things that maybe people aren't taking into consideration, or ultimately where you can help them as well?
Yeah, well, first of all, Steve, thanks for having me on. Having your independent thought over the last few years, as I've actually followed your channel, has been educational for me as a financial planner, especially looking at the real estate market and how central banks can manipulate how that operates. But some takeaways I would say for anyone watching the show today would just be, think about whoever you deal with in terms of business, and think about who pays them. So at the end of the day, if you're working with somebody like Steve, he'll get paid by helping you with the transaction. And that's totally fair for the amount of value he provides to those in this community. If you're walking into your local financial institution and they're selling you a particular product, just ask them, who's the person you're speaking with and how are they getting compensated? So if you're going to work with any professional, whether it's a financial planner, an accountant, a realtor, a lawyer, you really want to follow the money. And if you can understand how people in those places are paid, that will help influence who you should keep in your inner circle for making these important life decisions. Because if you simply just kind of trust institutions that perhaps have brands on various blocks, that might not be because they do what's in the best interest of their client on a regular basis. So all I'll say is everyone should have an open mind, continue to do independent research through guys like Steve, and that will allow them to reach their financial objectives, as long as they keep an open mind and are always continually learning.
Any sort of throw you for a loop here, number one book recommendation for someone that is trying to sort of manage their personal finances?
Let's see what I got here, Steve. One sec. Let's do. Okay. Well, if you're a business owner, Every Family's Business, great one. And here's a pretty basic one from Dwayne Doku on 15 secrets the tax man doesn't want you to know. Once again, I'm not a CPA, but it is important to continually learn, and thank you for everything you do. And I hope to do more work like this with you in the future.
Yeah, no, absolutely. Yeah, thanks again for having us on. So for anyone that's anyone that's interested or just has general questions, for you, want to talk, inquire about your services or whatever, what's the best way for them to connect with you?
Yeah, just visit our website, so SasSwealth.ca. Happy to chat. I don't take on everybody, but I'm always happy to just field questions and be a resource to the community.
SasS Wealth, so SAAS Wealth.com, correct?
.ca.
.ca, there we go. Important distinction. I'll put a link below in the description as well, so everybody can just click there and reach out to you. So yeah, thanks again for coming on the show, and we'll definitely do this again because I know there's going to be a lot of questions. So thanks again, Brandon.
Thanks, Steve. Talk soon.
Cheers.